This episode of Market Call is made possible by Robinhood. Try out Robinhood Legend, the all-new free desktop trading platform designed for sophisticated traders like you. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood financial fee schedule for more information. Yo, mob people, Swizzle here with Dan and Nathan, 11 a.m. on the East Coast, which means, Dan, what? Yes, it means it's 8 a.m. out there on the West Coast, and it's times between 9 and 11 in between, if you're like in St. Louis or something. Obi is not in St. Louis. I think he's in the great state of Illinois. There is an S at the end. By the way,
Obucina, he is the head of education at Robinhood. Friend of us, friend of the pod.
I got my Spotify Wrapped today. I don't know if you did.
I don't use Spotify. You want to?
Yeah, remember when we used to do the radio together? I wasn't allowed to say Spotify, but I did.
You had to say Pandora.
Yeah,
that was on the.
But anyway, I am once again in the top, like sort of 0.5% of Led Zeppelin listeners.
Rather than that, just rip through your top 10 artists, and I'll do mine. Just go for it.
I don't have it in front of me.
All right, I have one.
I'll tell you what it was. It was Zeppelin. I know who it is. It's Zeppelin, Bruce, the Stones, the Beatles, and Skinner. Off the top of my head,
which by the way has never changed, that top 5. Maybe that Zeppelin's always one. All right, so mine, and I want to make one huge caveat here, okay? But
your daughters are involved in this.
No. It's only me. Arcade Fire, Mumford & Sons.
I love Arcade Fire.
U2, Green Day, Taylor Swift at number 5, Bruce Springsteen 6, Pearl Jam at 7. This is what I want to give you a caveat. Mount Joy number 8, Hozier 9. And the Grateful Dead 10. So here's the caveat. Pearl Jam at 5. Pearl Jam is my number 1 by a long shot. I use service called nugs.net, which has basically every live Pearl Jam show the last 10 years, but hundreds from prior to that. So to me, I probably have thousands of minutes on that. I just want to be really clear.
So if Nugs was Spotify, Pearl Jam would be number 1.
I'll go and see if Nugs has a wrap, but and that's a wrap on that. So we got a lot.
No, it's not real quick. Almond Joy is one of my favorite bands too. So it's funny that we lined up there. And
I thought you were
Hoosiers. Hoosiers is another one.
I thought you were a Mounds guy. All right.
PK Fire. I mean,
what's wrong with you? You're such a this is when
I'm a hater. I'm a hater.
You go full dad jokes. You know what I mean?
By the way, it tells you your implied age, like the listening.
Oh, that's cool.
That means it's 67, which is not that far off.
Yeah,
by the
and
way.
deck 18, you're going to be 62.
Yeah.
All right, a lot to do today, Guy. With Obi, we're going to do some energy stuff. We're going to look at the XLE. We're going to craft a trade there. I know he wants to talk a little Bitcoin. For you and me, and we'll do some software with him too. I had this by 5 people. I sent it out. Maybe Amanda can pull this up. This was an information article, and we're just going to talk about it really quickly because I think this is something that's weighing on tech. But it's one of those markets again, Guy, where away from the mega cap tech, I see an S&P that's up 15 basis points or so, and I see lots of green, whether it's in financials, whether it's in energy today, it's in home builders, it's in pharma, it's in the regional banks have had a few days in a row here. So we'll talk a little bit about
that.
The
Russell.
Even the Russell. Hey, by the way, how is Russell?
Yeah, I got him back yesterday. I took him to the vet yesterday. He had surgery for melanoma, but they think they were able to get it all, and because everything's coming back clean. So yeah, I appreciate
the reason I ask is that yesterday when you were getting done with the market call, you were going to pick up Russell. And I think all of our regular viewers know
Take him to the vet.
Oh, you were taking him there. Okay. So this is interesting. This comes out at 9:30 or right before the market opened. And this is the information to me. This is the
Bible
on AI. They do such an amazing job here. So let's just rip through this really quickly. And this is something we've been talking about if she wants to blow that up a little bit. Basically, they're saying that Microsoft has ratcheted back their sales quotas from their salespeople, right, who sell their software to large corporations. And, this is something that, again, we've heard this over the last 2 years or so, that, you're selling software, you're selling seats to, big corporations or whatever, getting to upsell them something new that they've basically unproven yet, that it adds to, their productivity or whatever. And so for a couple of years after Microsoft had licensed OpenAI and infused it into copilots and the like, they were like giving trials of this stuff, and they've been not that successful in upselling. Microsoft immediately, maybe Amanda can pull up the chart there for a second. It sold off 3%. It's come back a little bit. I mean, this is not a huge surprise, but I'm just curious from a sentiment standpoint, how do you think about this?
I was listening to CNBC prior to coming on here, and the guy who's the tech guy whose name escapes me right now.
Kovac.
Yes, Steve Kovac, right? He was on, and he was saying how it's one specific Microsoft product. He wanted to make that caveat, which I get. But I think the bigger issue, to me at least, if you go back to that prior slide, it's sort of the return on investment stuff. And, all the amount of spend out there, and are people really seeing? It's hard to measure the savings from using the technologies. And I think that's what's coming down the pike here. And that speaks to, I also think, potential for competition to come in and driving down costs. And what does that mean? And so I get the importance of the technology. I also get the fact that it can become, and I think it's becoming somewhat commoditized. And the spend that these companies are making, I think now they're being penalized for it. And we'll talk about Apple at some point, I'm sure. But I think one of the reasons Apple is trading as well as it is, because maybe they didn't go down that road. And maybe not being first, second, or third is actually better. And not putting all that spend to work is a better thing. And I think companies now are sort of reevaluating the entire thing. At least that's sort of my take on it.
100%. Okay, so you're buddies with Harvey Schwartz. He's the CEO of the large private equity company Carlyle. One of the examples the information article uses is that Carlyle last year started using Copilot Studio, a Microsoft product that lets companies develop AI to automate tasks like summarizing meetings or drafting financial models based on Excel spreadsheets without needing to write any code. But in the months after Carlyle started using the tools, representatives told Microsoft they were having trouble getting AI to reliably tap data from applications such as Salesforce Customer Relationship Management app, which was necessary for some of Carlyle's automations, according to some of the people with direct knowledge. All right, so what's important to me, and then Carlyle reduced the amount it was spending on these tools. What's interesting to me, and we've been talking about this guy, is that if you have a highly regulated business, if you have a mission critical sort of, data sets that you need to put out there for a whole host of different reasons, at what point will you trust this data that's not now? And that's part of the point, that it's great that folks are trying this. They're going down parallel paths and doing this. But until you're ready to trust these systems and actually put your own neck out there with your own customers, this is something, whether you think it's going to be in healthcare, insurance, financial services, all these highly regulated, so that's my view. Right there. Okay, look at that chart. You see that 200-day. You've been talking about it. It's sitting right on it. That bounce that we've had over the last few days, not particularly impressive. And now you have a piece of news that could have this thing retesting that prior low and that, call it support if you want.
Yeah, so draw the horizontal line. You can see the sort of double top from middle of the summer to the fall. Yeah. I mean, that's clear as day. You see where we are in terms of the moving average. That's clear as day. You also see the gap that we had created back in May-ish. That's clear as day. So the question I think you have to ask yourself is, and this is, this could set up for a trade, and maybe we'll talk to Obi about it, but if we were to close below the moving average, do we fill that gap? And the short answer is yes, I think we do. So I think that's really important to watch. I mean, obviously, we've talked about Microsoft being one of the top, I think it's definitely one of the top 5 most important companies in the world, maybe the top 3, and their stock is equally important. And if it's starting to sort of do a back and fill here, you have to ask yourself, what does it mean for the larger trade in general? Obviously, today, nothing, by the way, because the market is sort of unched slightly higher, but it's worth pointing out.
Yeah, by the way, you see Amanda, and I've gotten really good with the legend too, but she's just dominating the charts there. And Amanda, you can draw a horizontal line from that 52-week high, and you also see where that puts you. So talk about this level of support No, going back below that. So yeah, and I just stopped right there. I just gave her a compliment, and now she's
Well, you were somewhat
yeah, right
ambiguous
there,
about
right,
that. Yeah.
right. Well, I said, yeah, that's right. From the 20.
There you go.
There you go.
That's the one.
So look at that. I mean, that's the battleground right there, you know. We'll take a look at that. You see the 200, you see that. Look, she's freaking good at this. All right. The aforementioned Mike Obucina. We just call him Obi. He's the head of education at Robinhood. Let's bring him on here,
Come right in
man.
the middle. Slap is oh.
There he is.
Now it's in the middle. By the way, it's worth pointing out, if there's anybody new watching, Michael is an ardent fan of the Chicago Bears, the monsters of the Midway, who find themselves, I think, with the best record in the NFC, if I'm not mistaken. So congrats on that.
Yeah, the game against the Eagles on Friday was a statement game.
Statement game. I like that.
Even though we've won a lot in the last 9 weeks, I think all of us Bear fans were like, you know what, we're just kind of getting lucky. But that game, they dominated. And it was great to see an old school, running game guy.
I will tell you, and I'm sorry about this, Dan. Amanda is great, by the way. They were looking to run that head coach out of town within the first couple of weeks of the season. Now, all of a sudden, the guy looks like a freaking genius.
I mean, it's Ben Johnson. I mean, you look at the Lions, right? He leaves the Lions, and all of a sudden now the Lions are a little shaky. Like, how much was he, adding to that mix there? But yeah, we're just enjoying it right now. We got
Embrace it
this week in Lambeau. So if we can beat Green Bay and Green Bay, then I think you got a lot of believers here.
Yeah. Well, Guy, remember we talked with our friend Liz Thomas about making a trip to a Lambeau Field for a game.
Never been.
I've never been either. All right, Obi, you just saw us on the Microsoft chart there. You see the news. It was kind of weighing on, it was weighing on NVIDIA for like 7 minutes. But, one of the things that we've been talking about a little bit is that, Apple and Google, obviously at all-time highs, they've really caught the narrative as far as this generative AI. And, it has a lot to do with, I think, distribution, more so than, let's say, what Apple has on their phones or what their offering is within iOS with Siri. And then Google, which was this massive underperformer from, really obviously the stock, but also from, a sentiment standpoint as it related to their products, to OpenAI and the like. So that's changed. But now you see NVIDIA at least 10% off its highs. Obviously, Microsoft is. Amazon's like 8 or 9%. Maybe it's 10% off its highs. Meta clearly is almost 20% off its highs. Tesla, if we can, I think we could, Guy, can we take Tesla out of the Mag 7 and just put Broadcom in there?
I think you're entitled to do that. Although I think, listen, certain people will always incorporate it, but I know that you'd rather put the Broadcom in.
Yeah, sort that by market cap if you don't mind there, Amanda. So just look at how easy that is. So, you see this NVIDIA, Apple, Google, Microsoft, they're all in the game there. Amazon, let's get rid of Tesla. Let's just move Broadcom in there, and we can just start talking about it a little differently. But Obi, when you see that sort of dispersion, it was like a one-way trade. Are you seeing that sort of activity among your customer base? Like, are they starting to get a bit more discerning about where they are placing their bets as it relates to generative AI or just in the mega cap tech space in general?
I think the theme we always talk about with Robinhood customers is they trim winners and they add to stocks that are down. I look at the tape this week. If we just look at the tape at the S&P, it's just been sideways, sitting in about a 60, 70 point range, 6,800 on the low end. I think we're getting up to like 6860 on the futures. And they're just sitting in this zigzag of a range. Today's another good example. If you look at the intraday on the S&P futures, we get the news of ADP and jobs, and they sell off, and then boom, they're right back to where they're at. I'm reading the market call chat, and I'm seeing just a number of people saying the market just can't seem to go down. And this is, since Thanksgiving last week, we've just been sitting in this super sideways channel. And I think to your question about the Mag 7, for anyone that's buying the dip on those, like, you're seeing a lot of rotation in the S&P. Energy leading week to date, the energy sector up a little bit over 1%. Discretionary and tech slightly in the green for the week. Everything else down for the week, with utilities, real estate, healthcare leading on the laggard side. So it just feels just kind of like a market that has no direction, no sense of Like, where's it going to go in the next few weeks? I don't know. But then you got VIX just falling off a cliff.
That's what I was going to ask you. You read my mind. Like, here we are with the VIX at 16.5. We were talking about a VIX north of 20, right around 25. I don't know, 10 days or so ago. I think it was November 20th. I mean, that's a very dramatic move in a very short period of time. And maybe, Obi, it coincides with the CME Fed Watch tool going from a 36% chance of a cut in December to a near certainty. I don't know if that's part of it, but the move in the VIX is, to me, worth pointing out, and you obviously just did.
Yeah, I look at this too from a structural standpoint. Like, what are investors doing going into year end that would cause a drop in VIX, right? Like, so let's ask ourselves what raises VIX? Increased options price. Like, increased options premiums are going to increase that implied volatility. So we kind of get through the recent sell-off and correction, markets come back. So I'm just going to use an example. I know, Dan, you talk about the strategy of a collar, right? Where, let's say you had gains going into the end of the year, you wanted to protect, you're selling upside calls, you're buying downside puts. If you get a lot of people rushing for that protection on the downside, that's where you're going to see that spike in VIX. We get past sort of the recent correction. I think a lot of people are taking off those puts, but they're still selling those upside calls. And I think that's going to, selling those puts are going to drop the IV, and then also selling those calls on the upside just compresses that implied volatility. And then now we get this sort of range bound market. It almost becomes a bit of a self-fulfilling prophecy. But I don't know. Like, do you guys get a sense that we're going to get some kind of a Santa Claus rally into the year end, or is this just more sideways chop until we get to the other side of the new year?
Well, I think it's the other side of the Fed meeting, guy. You know what I mean? Once we get by next Wednesday, the 10th, you think to yourself, all right, we're not going to have any earnings left. And so to me, it's almost positioning for January, for the new year. And so one of the things, guy, I was going to say is that, I just don't expect, let's just say we get this range that Obi's been talking about. Let's say we get that 25 basis point cut on Wednesday that's been telegraphed. Let's just say the market has that normal move one way or another. It reacts and then it does the next thing, the next day. And then, to your point, a guy is not a term he uses particularly often, guy, the Santa Claus rally. But then it could be just kind of smooth sailing. You have, 2 shortened holiday weeks into the end of the year. The one thing I would say is what you just said, Obi, about trimming the winners and adding to their losers. This is something that you guys see frequently. I think that might not be a great strategy with the Mag 7 into year end, because I think that a lot of folks have huge gains over the last couple of years. They've been waiting to take them in Meta, in Microsoft, that sort of thing. So to me, I actually could see the market moving higher just a little bit, because I think that you still have that waiting issue. And I think you could see Microsoft, Amazon, Meta, and NVIDIA not close particularly well in the year, guy.
The calendars, today's December 3rd, Fed meeting next week. You mentioned 2 weeks in the end of the month where holidays shorten, which obviously low volume, strange things happen. There's that old adage, don't short a dull market. And I think there's going to be some of that. And, you still have this chase going on. And my question to Obi in terms of, and I think this is important, does the fact that Bitcoin seemingly is bouncing here, does that add to this story? Or, if you look at Bitcoin, is this just a bounce off an oversold condition?
Yeah, I mean, I still feel like we're not out of the woods yet on Bitcoin. I know there's a lot of structural questions around sort of MicroStrategy and these other things, but looking just purely at the technicals, which we've done the last few weeks, this longer term trend line seemed to have held, and this one's going back all the way to October of 23, where this trend line is sort of been in place, and we saw a move. We said, I said a couple shows ago, like, don't be surprised if we go down and test that 75,000. It didn't get there. It held. And now we're sitting back above 90,000. Do we just sort of go back to 100 and start maybe an upward forming wedge where we get sort of less volatility going into the end of the year on Bitcoin as this moving average maybe starts to recede, and do we get sort of a compression of volatility and then some sort of expansion on the backside of that? Your guess is as good as mine, but from a technical side, this thing still seems to be holding its longer term uptrend.
Yeah, I guess, Guy, and you and I have been talking about this. It really is. We're not going to know until after the fact. What sort of leverage unwinds have we seen relative to some of these treasury names, relative to just some kind of speculative sort of buying on leverage and the like here. So again, Bitcoin remains one that's interesting to us because it's not only diverged from gold, but it's also diverged from the NASDAQ, and it isn't that store of value. It's become like a risk asset that a lot of folks are just kind of, I don't know, man. I don't get it right now. There was a time a couple weeks ago I said, well, if this thing got back towards 70,000, I might kind of buy it and just kind of close my eyes a little bit. But it just seems like there's other things at play, Guy.
There's something definitely at play, and we had been talking about this for a while, Obi, that, for the last however many, month and a half, 2 months, maybe longer, that there was something going on in terms of the price action in Bitcoin that was suggesting to me, at least, you're about to see sort of some risk off move in the broader markets. Now, to a certain extent, maybe we saw it in the NASDAQ a little bit, but there's this decoupling that's been going on. I mean, clearly it has no correlation whatsoever to gold. I think that's been pretty clear. I think we've debunked that many times over. I think to a certain extent, it's correlated to Fed speak. I think when the Fed watch tool got down to 35% for December cut, obviously I don't think Bitcoin like that, but I don't think it's necessarily a one-to-one. So I don't know what it is. What I think a lot of it is, though, and we've talked about this, I think the market is very predatory. I think they obviously see something in the form of MicroStrategies. 650,000 Bitcoin on the balance sheet, now at an average price of 75,000. And I think the market was going to try to test the boundaries of that and to see what would happen if and when we got down to the level that you just talked about before. Now, we didn't get there, but you saw all kinds of strange things start to happen as we got closer. And to your point, I don't necessarily think that's over.
Yeah, it seems to me like this is one of those markets like I don't feel like I have a particular edge in. Like it's still something that unless you're like knee deep in sort of the DeFi world and understanding all the connections and where everything sort of sits, it's I think for old school investor traders, you're trying to find those correlations. And to your point, just seems like it's out there on its own now. Tom Lee recently had said, Bitcoin was leading the market. I don't know if you can make that case anymore. But look at the chart of MSTR. It's not a pretty chart.
No.
And the question is this carrying over into the Bitcoin market? Some people say yes. This is one of those things where I'm just going to put my hands up and say I don't know. Like I'm kind of sitting back and watching with the rest of you. But to your point about gold, complete opposite chart on the gold side. Gold has held that sort of 4,000 level, trading back towards those recent highs of 4,400. Active contract trading, but still looking at the continuous chart here. Little damage done on that initial, I'd say, rip up to 4,400, but that 4,000 level held well, and now we're trading gold at 4,250.
Before we go to the XLE, real quick, silver is doing something as well. And for whatever reason, historically, when I say historically, it's to call it the last 50 years. When silver starts to do strange things, it speaks to something else in the system. And you're going to start to hear more and more things about the silver market. We're at an all-time high here in silver, whether people realize it or not. And it's done it in a very stealth manner. So thoughts on that, if any?
I this is one of those too. Like I watch along with gold. I don't trade it as much as gold, but I distinctly remember that April 2011 high because one, I was on an overnight futures desk. So for 2 years, I was watching that run up in gold and silver. And that bubble, if you call it that popped, if you remember, pretty much the night we got bin Laden. Like that was, I remember distinctly where I was, and that was sort of the move that took the air out of both gold and silver. Now, in terms of this move, to your point, Guy, like looking at the all-time chart on silver, 59.43 on silver futures right now, and it's parabolic. So the question is there some air gonna come out of this one as well? Just be careful on that, especially if you're trading silver futures. The silver futures contract is a big boy. It's a big contract. I think it's 5,000 ounces. So if you're kind of piling into this contract, you get a big move down that can wipe out a substantial amount of capital if you're on the wrong side of that move.
Yeah, you got to use your stops there, people. I was actually trading S&P futures yesterday, getting chopped up a little bit, talking about that range, Obi, that you were kind of highlighting here a little bit. And there was not a bad, there was decent places to place your stops because it was kind of, like look at that. Yeah, you see what's going on there. So, but again, I'm going to get back to those, and I'm looking for just a breakout one way or another of that range. You might see something that moves into that Fed meeting on Wednesday, but we will see. And the latter has actually been really helpful to me, just to see like kind of the kind of momentum that you're seeing one way or the other towards the buy and sell side. All right, our good friend Peter Bookvar of the Book Report, he had a couple comments. I think it was on a podcast, but he sent them out on his daily email. I think it was yesterday, and he's going to be on Fast Money with us today, guys. So we can kind of drill into the oil trade. But he's talking about tight capacity. He's talking about some trends into the new year where he sees higher prices for gold. So we're going to talk about that with Peter later this afternoon. Carter had a note out. Carter Braxton Worth of Worth Charting today, looking at the XLE. Now, this is interesting. This is very Carter, right? As recently articulated, we're thinking of the current 3-year standoff is likely resolved to the upside. And he just kind of gives you the prices over those last 3 years. You see that it's something consistent, 90 point. He's basically making the case 90. All right, Obi, help us as you're thinking about this chart, because Carter didn't put a chart on there, but it's something where, I see a wedge. I see a series of higher highs, a series of lower lows. It's kind of getting, tighter and tighter here. Give us like what you're thinking of, because I think Guy and I have a slightly bullish view here. And if you line that up with Peter's fundamental take and you line it up with Carter's technical take, it's something that I find kind of interesting. How are you thinking about this? Let's look at a 1 year, then a 2 year. And Guy, I definitely need to get your fundamental take here, because that might help inform how we kind of size the trade and what the catalysts we're looking for and the timing of it.
Yeah, staring at this chart, Dan, this is the first time I really looked at XLE in a while. I typically tend to look at oil and trade crude oil, the commodity, but with XLE, right, you're trading, I think the top 3 names on this, just make sure I get these right. You've got Exxon, Chevron, ConocoPhillips. Yep. Those are your kind of big 3 from a percentage wise in this ETF. And I think it's important to understand that when you're trading the oil names, there's different factors than trading the commodity itself. And you can just see that by the chart. If we put up a chart of oil here, it's almost the opposite of this chart, where you've got this sort of downward drift in oil prices. But on the XLE side, it's almost like we're kind of, I don't know what you call this, a pennant, a flag. Going back to 2020, we've definitely seen this increase in terms of price, and then kind of start to sit in this range going back to, we'll call it 22, sitting in this range of we'll just say $75 to $100 roughly. You're sitting towards the upper end of that range. Meanwhile, your implied volatility on this, let's see what that's doing. You've got an implied volatility, and we got to really zoom in to kind of see the just kind of going sideways. Nothing too spectacular. Implied volatility on the lower end of its 52-week range, sitting at an IVR rank of 16%. So if you're telling me you're bullish, if you're telling me you're playing for a breakout, this sort of screams long premium setup for a bullish strategy. Because at this point, vol is low and cheap, and if you get any sort of move to the upside, I don't know if you're going to see an expansion in vol on that, unless you get some more volatility entering the oil market itself.
All right, let's break it down. So, Obi, if you can do a longer term chart, go back to like 2014 or something, and you'll see there you go. See the last time that XLE was at these levels. Obviously, it traded horribly for the ensuing 4 or 5 years, and then we're getting back on a horse. I look at it this way, Dan. Some people will say, you know what? Look at that guy. Potential for a head and shoulders. You have the one shoulder on the far left, obviously the head in the middle, and now this shoulder. But problem, of course, is the fact that we've been sticking around here so long suggests to me that we're about to take the next leg higher. I think we get through that prior all-time high, and then we'll see what happens from there. And one of the reasons I think that is, You're obviously doing it without the underlying commodity, as Obi just said. I don't think you necessarily need it, although it would be somewhat helpful. But look at what the OIH has done. To throw that up real quick, I mean, very quietly, the oil services has gotten on its horse in a pretty meaningful way over the last couple of weeks. So that's a longer term chart. If you go shorter term, you see what I'm saying. So there are things that are clearly happening, I think, in the space that at least suggests to me that energy is going to be a thing, Dan.
Yeah, and what Obi just had to say about IV and implied volatility, the price of options. We talked about where the VIX was, but we also talked about where it was relative. It's gone sideways, and it's a little above those kind of multi-year lows, that sort of thing. But long premium expressing a directional view, I think makes sense. I was looking at some options that might be decent to sell, right, relative to something to buy. And we've talked about calendars, and we had some good success, Obi, a couple weeks ago looking at NVIDIA prior to its earnings, and that really did help take off a bunch of premium for that long premium trade that we were trying to do. Let me drive on the legend here for a second. I want to go to the options chain. And so if I want to look out, I mean, December 19th, that's 2 Fridays from now, right? I don't think there's any value of putting a long premium, short dated, long trade on right now, because we really haven't had that move. And I just want to make the point that the ETF's trading at 91.50. Look where that at the money call is. Let's call it, 100. 165 or something like that. You see where the put is. So you basically have, a 2.5% or actually a 3.5% implied move, between now and December expiration, which is actually kind of a lot for the XLEs. So sometimes you can kind of get tricked a little bit by looking at implied volatility that looks, at least cheap implied vol terms, but in dollar terms, it seems like a lot, or percentage terms. So let's look out a little bit. Let's go to January regular way expiration. That's January 16th. And, we also see some funky stuff that happens in the beginning of the year, right? You see repositioning, things that underperformed last year that might see investors come into for a whole host of different reasons. So I just want to look at the 92 call in January expiration. But Guy said something interesting before, is that we have these 2 holiday shortened weeks, right? You also have the Jan 16 is going into a long weekend. Also, that's MLK weekend. So you want to kind of be careful about how you're positioning from a long premium standpoint. So that 92 call, and maybe Obi, you can kind of describe the delta on that, as you would expect, is about 50%, right? It's like it's a coin toss there. But let's look at the theta, the expected decline on a daily basis, how much is going to bleed if this ETF just stays at the same point. Obi, you want to pull up your options chain there and just kind of show us how you're thinking about this. Let's just say that XLE is stuck in that range. You're looking at the theta. You want to know how much this option, how much value it's going to lose on a daily basis if it just sits here.
Yeah. So you're looking with the January expiration, you've got 44 days to expiration. Typically, your theta begins to accelerate around 30 days. So we have a couple weeks where theta is not going to chop us up too much. And if you look on your option chain, the theta for the 92 call on the Jan options, 2 cents. All right. So yeah, we're gonna bleed out a little bit over the next few weeks. But once we sort of get into that range from 30 days to 14, you're going to see a huge acceleration in your theta, and that's going to pick up. If we were simply to buy this option, Dan, sitting at a 48 delta, the other column I like to add to the option chain, if you're not a big Greek head, if you don't understand Greeks and how to use them, you can simply use the probabilities. And we have 2 columns: chance of profit long, chance of profit short. This takes into account your break-even price at expiration and what would the probability of the stock being above that break even, so that you make at least 1 penny on the trade. And you can see the difference. The 48 delta, that's the rough approximation that the option would be in the money by expiration. But our chance of, if we bought this 92 call for, we'll call it $2.10, chance of making money on this is about 34%. So just seeing that, how much that drops your probability of success of buying that single option. And I think, Dan, this is where you get to the point of how can reduce that cost basis by potentially selling options against this long call, reduce that break even, increase the probability of success.
All right, let's do this thing. Let me go back to me driving on the legend here. So we talked about these ranges here. You see, it's, what do we got, Guy? We got like 80 to the downside, we got like 85. The upside, we have this kind of 92.5, 93 sort of range that we've been in, right? And we already looked at some of those other things. So I look at this gap that we saw back in April, and let's say it started, let's just call it 93, right? And let's call this high from late last year after the election, that's like 98. All right. So let me go back to the options chain for a second. I'm looking at January. We just talked about all of that holiday shortened stuff or whatever. I want to look to sell an option just like Obi talked about out of the money here. Let's look at this 95. Okay. This is in January expiration. Let's call it $1. It's 99 cents at 107. I'm not just going to smack a 99-cent bid, right? But let's just say I like the idea of taking in 1% of the underlying ETF, and it's what, 4.5% or 4% out of the money, which, believe it or not, is a big move, right? For XLE, you think 40% of this is Exxon and Chevron. All right, so let me just dial this up here. I'm going to look at selling the January 95 call. Okay, so I put that in there. Now I'm going to go to February, but I don't like February. I don't like creating a one, you know what I mean, a 1 month sort of thing. Let's look at March for a second. So let's look at the March 95 that we're looking at here. And I want to see the what is that? That's bid at 252 at 274. So if I were, let's just say, to buy that at 260, okay, I'm actually reducing the cost of that 95 call in March by the $1 that I'm selling in January. I kind of like that spread there. Obi, what do you think? The 2 month thing? I'm looking at January, selling the 95 call, looking out to March, which is 2 months after, and buying the 95 call. And I'm taking a really good hunk out of that longer dated premium out by creating the calendar.
Yeah, and you have plenty of time ahead of that, as we talked about with Intel last week. You have plenty of time to manage the January option as you approach X, roll it, adjust it, and keep sort of collecting premium as you approach the March expiration. The March 95 call on its own has a chance of profit of 28%, but as we reduce that, we're going to get closer and closer to 50%. And it's, you know, if you believe XLE is going to rise and sort of creep towards that 95 strike as we approach March, that's what you want to have happen. We talked about this before. In a calendar spread, it's like throwing a dart. You want the stock to go right to the strike price and sit there, and the implied volatility on the back month to rise, and those short-dated options to go out worthless so that you can roll them for credits. And from a simulated return standpoint, there's your classic calendar shape. Right at the 95 strike is our greatest chance of greatest profit potential. And then as time goes by, we're going to manage this trade accordingly on that short dated option so that we can give ourselves the best chance to make money on this one.
Yeah,
Look,
we'll be sure to update it. Well, no, I'm just saying we'll be sure to update the trade idea and look at the simulated returns guy, over the next couple of weeks.
Yeah, and what I was going to say, it's been people will be watching this and say, "Well, XLE hasn't moved in 3 years, guy. Why are you even bothering?" And they're right to say that, but the reason why we're bringing this up, I do believe there's something going on below the surface, and it's manifesting itself in specific names. Like if you just sort of pick and choose names out there, Marathon Petroleum and Valero and Schlumberger getting off the mat and Halliburton, like there are things happening around the edges that suggest, to me at least, that energy is starting to be a thing. So look, there's a very good chance we're early, and options being early, is I think everybody knows is being wrong, but there's also a very good chance that something is about to happen here. And as Obi said earlier, you're using the depressed volatility as your friend, not your enemy.
Yeah, and so I'm looking at this. I priced this up. So we're selling the January 95 call. We're using the proceeds to help buy the March 95 call. The market on that is 159 at 172. I'm going to just get to the other side of mid on that. I'm going to bid for that, and I just put that order in there. And listen, and I was filled. Okay, so the idea of a spread at 159 at 172 offer, you're not just going to go in there and you're going to pay the offer, especially when you have two legs to a trade idea. All right, so that's our XLE. Obi, anything else on your mind here that you are keeping an eye on? We just talked about the range that the market's in. We talked about really the only catalyst left. There's one other catalyst, I guess I throw out. So you got the Fed, and then you also have this Supreme Court ruling Is this going to be a market mover? Let's just say they strike down these tariffs. We already saw Costco suing the administration, right? And I thought that was really interesting to try to get some of this money back, right? They're sick of having to eat the tariffs. They have to make a decision, pass it through to customers, eat part of it, lose some market share to somebody who's doing a better job, which might be Walmart. Any other catalysts that you're focused on between now and year end?
You're getting towards the end of earnings season, right? We've got Salesforce after the bell today. I'm sure that's one a lot of people will be looking at. But this is that time of year. Our friend Steph Guild, who I believe will be joining you guys this week for the Risk Reversal Pod, she likes to say it's that time of the year when there's no news, there's no sort of. It's like when your significant other goes away on a vacation and you're waiting to see a text or call to make sure everything's okay. This is the weird time of year where news can drive the tape. I remember, what was it, 5 or 6 years ago, we had that Christmas Eve bottom that we had that major sell-off, and then the market just rallied off the lows there on Christmas Eve. So it's like strange things can happen, as you mentioned earlier, Guy. Lower volumes can lead to higher volatility. News on the tape can swing markets. So just be mindful of that if you're trading, and sometimes the best trade is no trade.
And always having you here has been the best trade we've made in a while. So, Obi, we thank you. We hope your Bears of Chicago emerge victorious. Although, in full disclosure, when I speak to Elizabeth Thomas, I will say the exact opposite, just so we're on the same page.
Well, we've got Steve Quirk here, who's a Green Bay guy,
Yes.
and so we have some fun with him. I think I don't know if the Bears, if this is their year, but this is certainly the year that they turned a corner, and it's been fun to something to do on Sundays again.
Yeah. Well, by the way, Q is going to be on the pod, I think, over the next couple of weeks too. So Steph Guild is obviously the head strategist. She runs money over there for you guys. We always love talking to Steph. And then Q is, like you say, he's old school. He's old school. He's a Packers fan living in Bears territory. He's a brave man. So Obi, thanks for being here, man. We will see you next week.
Thanks, guys. I just want to say thanks again for this lovely market.
Oh, look at that.
Oh, look at that. What do they call that?
Keeps me hydrated, the Risk Reversal logo.
Wow.
Pretty good swag.
Swag, right?
New York, we need to see some of those cool little yellow feathers, on a hat or a shirt or something like that. All right.
Yeah.
May I ask Obi a question?
Of course, it's your show.
Is PK Fire on your Spotify Wrapped list?
So no, I'm not a Spotify guy.
No, because you're a normal human being.
I'll give you two guesses what my number one was, but
I know, but you let Guy guess. I know what it is.
Two guesses who your number one is. Metallica. You're
Correct.
like a gearhead.
Correct. All right.
That's so pretty good, by the way.
This is Apple. This is not Spotify, but this is my top 5. We've got Metallica, the Beatles, which, by the way, I saw Sir Paul McCartney in concert last week. Took my mom for her birthday.
Wow, that's good for you.
That was an incredible show. Number 3, Jimmy Eat World. A lot of people don't realize that I'm an old school alternative rock guy. I grew up as a kid of the 90s. Number 4, Billy Joel.
Stop it. Now you're embarrassing yourself. You should just stop. I'll pretend I didn't hear that.
Watched the amazing documentary on HBO about Billy Joel
awesome.
this year.
He has more shitty songs than he has good songs. Back to you.
And then number 5, Led Zeppelin.
My man. That's what I'm effing talking. I don't know. Who is number 3? Jimmy what?
Jimmy Eat World. They're a fantastic band from the 90s and 2000s, alternative rock. God, Dan knows Jimmy.
Yeah, I know that. I mean, you got a wide swath there, Obi. Beatles are not in my top 30, to be honest with you, but it is what it is.
That new song this year. Remember, they used AI. They found an old track that John Lennon recorded, and it was a demo tape, and they used AI to take his voice out, and then they had some stuff they recorded back in the day with George, and they turned it into a song. Ringo and Paul did. And it's really a great song. They call it the last Beatles song. And if you don't tear up listening to it, you really have no
guy. Will you tear up listening to an AI Beatles song?
I'll be weepy all day.
Yeah.
Well, Obi, the you can't teach an old dog new tricks. Guy Adami will not be listening to an AI Beatles song there.
The thought of the AI thing just infuriates me. But whatever.
They didn't make up voices. They peeled out an old track and just isolated his voice and then
You know who's rolling over in his grave right now? John Lennon. Like, think about that. I mean, maybe his estate's making a few bucks off of that or something like that. But I don't know. Obi, thank you, my man. We'll see you next week. We appreciate it.
All right.
I don't know that Billy Joel thing. We might have to rethink it.
I know. Hey, guy, I want to hit a name.
Meanwhile, Yoko Ono's still alive. I mean, I never really got the Yoko Ono thing.
I don't think anybody did, other than John Lennon, by the way.
And she was a singer. She was just brutal. I mean, she just yelled. Anyway, sorry, I don't know what I'm gonna.
She screeched. We got to hit this name because on the fast money, I'm not a big fan of what part?
The final trade.
Oftentimes I'll look at Guy because he sits right to the left of me and I'll be like, Guy, what's my final trade? We have the intern comes over. What's your final trade? It's not something I think about. It's not something I need on my brain all day long what is the thing that I'm going to talk about for 10 seconds. Okay. But it's a device that the show has used. If we make it to January, it'll be how many years, Guy? 19. It's not fun for me. So last night I said Netflix. I said, you know what? It looks like they're not going to win this Warner Brothers thing, and the stock probably goes higher. Blah blah blah. Well, the stock's down 5% today. So maybe they are winning this Warner Brothers thing. When you look at, let's just pull up the chart for a second. Like, are you tempted at some point to say it's discounted? You know what I'm saying?
This one. We've talked about it, and I will tell you because we said it at the time when why can't I think of his name?
Tom Rogers.
Tom Rogers came on the show in June, at the end of June, when they reported, and he was concerned about a couple different things. And somebody who had been steadfast in terms of the stock was starting to waver. That concerned me, and he basically rang the bell. And there've been a couple bounces since, but not that much. Now, if you draw a horizontal line across, you'll see the prior all-time high was earlier this year, in April, March, or February.
Yeah.
So we're right there. I mean, this is a big support level. Now, we're through it a little bit, but you got to be disappointed with the price action here. And it suggests to me, as the moving average starts to flatten out, that, maybe we'll get a bounce back to the moving average at some point, but something has changed here. And the fact that they're contemplating making an acquisition of that magnitude, to me, suggests that the growth stage might be over. And that's never a good thing.
Yeah. And, a year and a half ago, I think they kind of stopped giving subscriber numbers, which caused a lot of volatility, on a quarter-to-quarter basis. Give me a 3-year chart here for a second. And I just want to show you this uptrend that's been in place since late 23. And you see a lot of points in which it just kind of bounced off of. Take it the next one. Yeah. Well, whatever. You see the point.
You get my drift.
Yeah, you get my drift.
Right there.
I think it's getting close. Yeah, from that one. I think it's getting close. And what happens if the stock's down on a day like today because of that, and then they don't end up winning it? I don't think from a competitive standpoint it matters if, let's say, NBC Universal gets Warner Brothers. You know what I'm saying? Like, I don't think that's going to be a huge deal. We know what Netflix does. We know what they do well. Just really quickly, though, if you look at the peak to trough decline that we had from the February highs to if you want to go back to a 1-year chart, to the April lows, it was 22%. Right now, Guy, we're in the throes of a 22%, decline.
Decline, yeah.
Yeah, I don't know.
She's playing around. You said closer every day. That, of course, a song from Mamas and the Papas, actually specifically Cass Elliot, Closer Every Day. I have more Cass Elliot songs on my Spotify playlist than I do Metallica.
Jeez. I mean, I think 98% of the people watching right now have no idea who the Mamas and the Papas are.
No, I disagree with that. Cass Elliot, one of the great vocalists of the last 60 or 70 years, genius.
Yeah.
Of course, she was 1/4 of the Mamas and the Papas, although I would suggest that she was 1/4 in number, but she was probably 70% in terms of contribution to the band with her vocal range.
Yeah.
Died much too young. Some say she choked on a ham sandwich. I mean, that's sort of urban legend. Let's not go there.
Let's just really quickly on the Netflix thing, Guy.
You don't want to talk about
is
Cass
also
Elliott.
fascinating. You were just talking about your Wrapped, right? Look at Spotify. I mean, like, if there's two stocks or two companies in the entire stock market that are as closely related, as far as businesses and the like, it's these two. I mean, this thing is just falling out of bed, and the fact that both of these stocks made highs, and never confirmed any of the new highs.
The same chart.
Yeah,
and
that's
both
down
popped out at the same time.
it's down 28%. And I had SanDisk fever breaking watch. Remember we talked about this yesterday. I just want to say, like, when these things start to kind of unwind a little bit from a sentiment standpoint, I mean, just like this, like, had that parabolic move in a 2-month period. I mean, there is no reason, guy, this stock can't be at 150 in 2 weeks. If you think about it. And I just think that's important to me from just a speculative sentiment standpoint. Does that make sense?
I don't disagree with that. I mean, I think actually you could overshoot that too, by the way. I mean, again, historically highly cyclical, highly commoditized. All of a sudden it's different this time. I don't think it's different.
Yeah. All right. One last thing, I promise.
Always one last thing.
This is the very last thing. Michael Burry was on a podcast, and I get what it is, with Michael Lewis. Michael Lewis, who wrote The Big Short. Michael Burry was the main character in The Big Short. Michael Burry never talks anywhere, guy. And he did this thing with Michael Lewis, a really fascinating read. And, they talked a little bit about The Big Short and everything like that. And, where he is right now, he's obviously got a lot of attention for, his bearish views on AI, specifically NVIDIA and Palantir. I'm going to get to that in a second. But he made a really good point that, CNBC, when they reported his 13F filings, they did bad math. They were looking at these options and the way they calculated. And again, I have no idea how that happens. And, it's like, it leaves people wondering, like, what are we trying to do here? Are we trying to make headlines about billions of dollars of, bearish views on this? Are we going to look at the notional value of something where you're buying a deep out of the money put or this and that, whatever, that has a very low probability of success? So there's nuance there, which is pretty fascinating. I think that annoyed him. I think that was one of the reasons why he went on with Michael Lewis. But then there was also this article about David Stacks, who's the crypto czar and the AI czar in the White House, who is a VC, and he's like, he's built businesses, PayPal, he sold them, Yammer, he sold to Microsoft. I mean, the guy's obviously been a very successful operator, but also investor. And they were calculating, the price of the GPUs that he negotiated a sale to UAE, you know what I mean? And it was just bad math. Again, how do these writers not know how to do math? Because you could go to a generative AI and say, what's the average price of a Hopper chip, right? Blah, blah, blah. How much is that if you were going to sell 100,000 of that? It's not hard, right? Like, is it hard? I don't know. But, like, do some simple math here, people. Like,
there's no rigor. That's the word we used to use. All right.
Rigor. So the one name that he talked about, forget NVIDIA, we've done that, Palantir. He had this stat, guy. It was fascinating to me. He said they're going to do $4 billion in sales. How many times have you and I said that? Like 1,000 over the last year and a half. But he said there are 5 founders of this company that are billionaires. So he said on a revenue to billionaire founder ratio, does that make any sense? I mean, it was kind of an interesting way.
I mean, it's one way to look at it. I mean, has everything to do with the stock appreciation. So when you look at it there, it's even more absurd. I mean, so each founder is basically taking a quarter of the revenue. I mean, if you think about it that way,
yeah,
it's priced to revenue. It's preposterous.
Yeah, I feel like the reason I want to show SanDisk first, I think the fever might have broken in this one. I think the idea that they have, $4 billion, that's going to be $5 billion in sales next year. You know what I mean? It's not like it's growing at some crazy breakneck speed. I mean, 50% growth, that's fine, but it trades at 94 times this year's sales and 66 times next year's sales.
By the way, shout out to Doug Cass, who hopefully the dog is okay. Ollie had a seizure. So, Doug, we're obviously thinking of you because we all, most of us have pets and we understand how close. And he is now saying that real name of Cass Elliott was Ellen Naomi Cohen, which I didn't know. See, that's why
She's tribal. She's my people.
I don't know what that means.
I will tell you,
the Amazon. I mean, what does that mean?
Interesting. We have 2 cats and a dog. We have one cat that was 21 pounds a year ago.
21-pound cat. They call that a leopard.
It's a yellow orange cat. And he's now 14 pounds. He's got cancer. He's got a bunch of stuff.
Sorry,
so it's very sad. So I empathize with you and obviously Doug, and I have a lot of friends who actually recently, I don't know why, I have sick pets. And then my main man Dodger, who's my dog, and he's 13 years and he's developed some stuff too. So we're thinking about Doug, we're thinking about Russell, think about Tom, think about Dodger. We're out of here.
Think about Cass Elliott. Think about Obi.
I'm thinking about.
I'm thinking why Obi would have Billy Joel on his list.
Cohen. I'm thinking of. I want to know when Doug's back, what his rap looks like, because he's old school, and I think he's got some great, probably some great choices there, 60s and 70s.
Maybe he'll share it with us, and we'll talk about it tomorrow.
All right, I will not be listening to Metallica on my Wrapped.
No, but I'm about to play some PK Fire and some Hoosiers, because I love their work.
Okay. Thanks to Obi. Thanks to Doug. We're thinking about you, bud. Let's get out of here. We'll be back 11 a.m. on the East Coast, 8 a.m. on the West Coast.
Butters tomorrow.
We got John Butters. He is the senior earnings analyst at FactSet. We'll have his fine work that goes into the senior analyst earnings insight blog every Friday. You can have it in your email box. You know where to go to get it. See ya.